The Soros financial massacre of 2025. You might laugh at Warren Buffett for selling U.S. stocks and missing the internet stock boom in 2000, as well as last year's AI stock surge. But there's one person you can't underestimate. For 28 years, since 1997, this man has waited patiently. While the world seems to have forgotten him, he hasn't put down his hunting rifle. He lies in wait, watching for his prey, timing the perfect moment to pull the trigger. If he fires too soon, the prey will bolt, and all his efforts will be wasted. Now, after years of patience, he has finally taken his shot. What does this mean? It's a carefully calculated death warrant. If you still don't see the gravity of what's coming, if you're still blindly buying U.S. assets, stocks, bonds, or even just holding U.S. dollars, you're swimming against the tide of a looming financial crisis. You're up against a market-manipulating mastermind, against the organization Soros leads. In short, you'll soon see that Soros has locked his sights on Elon Musk. The stoic mind greets you all. Tesla stock, owned by Musk, has recently been viciously shorted and has crashed by 55%. What's short selling? It's straightforward. Normally, we buy stocks low and sell high to profit, right? Short selling flips that. For example, say you buy Tesla stock at $100. You now hold Tesla stock worth $100. I want to short it, so I borrow that stock from you and sell it on the market for $100. Now I've got no stock but $100 in cash. When Tesla's price drops to $50, I buy it back. I've got the stock again, plus $50 profit. I return the stock to you with $5 interest, pocketing $45. That's short selling. Sell first, buy back later when the price falls, and profit. If the stock rises, you lose. If it stalls, you still lose, thanks to the interest you owe the lender. That's how retail investors like us play it. So why has Elon Musk publicly claimed Tesla's brutal drop is due to a Soros-led group deliberately shorting it? Here's what it means. Step 1. Soros manipulates public perception. He controls a vast network of media outlets. In just days, 47 credible news agencies pumped out over 3,000 negative Tesla stories worldwide. Examples? Tesla sales in Germany tanked 70%. Sales in China and Europe halved. Wake up, check your phone. And if you follow the market, you're drowned in Tesla bad news. In 1 week, panic selling of Tesla stock spiked 178%. How does he manipulate sentiment? Simple. Through media, through news that creeps into people's heads, eroding faith in Tesla. But that's not enough. People need hard evidence to fully buy in. So, step 2. When Tesla's stock peaked, Soros pounced. He scooped up a huge chunk of shares, then dumped them. This sell-off swallowed 18% of Tesla's circulating shares. Put simply, it's like he bought out 18% of Tesla shareholder stock, then flooded the market to tank the price. Don't have enough shares to sell? Lend them to me. I'll crash the price and give them back. Won't lend? No worries. I don't need you. I borrow from your broker or bank, because when you buy Tesla stock, it's not really in your hands, it's with the brokerage or bank. So I borrow from them. When you see your Tesla stock getting crushed, the price nosediving, You'll wonder, sell and cut losses. If you hold, fine, others won't. The more they sell, the lower it goes. Soros keeps dumping. You don't sell, the stock keeps sliding until you're forced to. Still holding? Okay. Step 3. Physical sabotage. Dozens of Tesla stores have had windows smashed for no reason. Tesla's clean energy stations have been trashed. What business can Tesla do now? If Tesla can't operate, why hold its stock? But that's still not enough. Step 4. The knockout punch. When Elon Musk bought Twitter, he pledged 63% of Tesla's stock as collateral to a bank for the loan. If he'd sold it all then, Tesla would have folded and he'd have lost control. So he used it as collateral instead. Now, with Tesla stock in freefall, that collateral's value has shrunk. Say you pledged stock worth $1.1 trillion, and the bank lent you $800 billion. Now the stock's down to $800 billion. The bank's loan matches the collateral's current value. If it drops to $700 billion, the bank loses. They'll cut off lending and demand the full $800 billion back. Can't pay? They'll dump that stock on the market to recover the debt. Once Tesla's stock hits the bank's danger zone and Musk can't repay, that pledged stock gets sold off fast. Then, Soros's group can snag it at bargain prices and return it to the original lenders. Think this is just Musk versus Soros? Look again. The U.S. stock market's tumbling too. If Trump wins and a titan like Musk sees his stock crater like this, can other stocks dodge the same fate? Here's the message. Soros, a man who doesn't move lightly, has struck. And he's not stopping at Tesla. Mark my words, this is just the opening salvo of a precision-planned financial massacre. You'll see this Soros takedown mirrors the 1992 Bank of England collapse and the 1997 Asian currency shock. Only this time, his target isn't foreign nations, it's the US itself. Laugh now, saying, "Who'd short the US?" I'll laugh back. The 2008 crisis started in the US too. Back then, the US basically went bust, banks failed. Yet today it's fine, untouched. Why? The blast hit the US, but the bodies weren't American. The world took the fall, not US citizens. The cost was global. Don't want to be this crisis's victim, or even want to climb the ladder. Subscribe to my channel. I'll keep delivering insights moving forward. Afraid you'll forget and waste your time? Like this video, it'll save to your playlist so you can revisit it anytime to stay sharp and act. Even the U.S. Federal Reserve, the monetary policy overseer, has been bleeding cash for years. The U.S. government's broke, with no budget left. U.S. Treasury bonds? No buyers. No one's lending to the U.S. anymore. Add to that the U.S. stock bubble, once propped up by AI, is bursting. U.S. inflation's runaway. Every economic signal screams recession, yet the Fed won't cut rates. Worse, since the pandemic, the U.S. has turned into a ghost town. Offices and commercial spaces sit vacant, while loan rates soar, leaving property owners unable to pay. Banks are stuck with mountains of bad debt. Get it yet? The stage is nearly set for a ruthless short. If you don't see the full picture now, waiting till the market implodes to look back will be too late. This playbook's no different from before. New packaging, same poison. What's that mean? When fate wants you gone, it first drives you crazy. Back when Southeast Asia was booming, China was cashing in and assets were skyrocketing. Everyone was speculating like mad. That's when the prey was weakest. Soros raised his rifle and fired 3 shots, igniting the Asian crisis. Shot 1, shorting Thailand's stock market. He targeted Thailand's big banks and financial firms, dumping their stocks. Meanwhile, top global media and even Thailand's central bank spread word that Thai financial and mortgage firms were in deep trouble. Panic hit. People stormed banks and firms to pull cash. Defaults piled up, and Thailand's stock market crashed overnight. Shot 2. Would Thailand's government step in? If not, the whole economy, market, and assets would collapse. Soros could buy up Thailand's wreckage cheap. No need for a 3rd shot. But if they intervened, they'd tap the national treasury. Q shot 3. Thailand threw hundreds of billions of US dollars at the crisis to stop Soros. They didn't grasp the fallout scale. Soros attacked, shorting the Thai baht, selling off their currency. He didn't stop there. He split his forces, shorting currencies across Southeast Asia, unloading regional cash and buying US dollars. He knew once the baht fell, other currencies would topple. He widened the war, hitting the whole region. Southeast Asia spiraled. Indonesia, the Philippines, Myanmar, Malaysia, and more couldn't escape. The result? You know it. Soros won big, walking off with a fortune, while Southeast Asia's decades of wealth and progress got gutted. The fixed exchange rate system died too. Soros's shorting was 3 linked shots, the first setting up the last. Is that playbook back now? I've said in past videos, you'll notice Buffett and US capitalists quietly cashed out at the peak, sitting on cash piles. Who's got US stocks now? Retail investors hold 30%. US mutual funds hold 50%. Many assume big institutions like funds control most of the US market. But nope. 95% of those funds are owned by individuals. So 30% of US stocks are directly with retail, 40 or 50% indirectly via funds. Foreign investors have about 10%. Rough math? At least 70 to 80% of US stocks are with retail and foreigners. If the US market tanks, who's hit? Buffett, Gates, Zuckerberg, those who sold US stocks early. No, it's retail investors and global cash poured into the US. Even if this blows up in the US, it'll be 2008 redux. Capitalists grab bailouts and zero-rate Fed loans to buy cheap US stocks, while retail and the world eat the loss. Why's Soros shorting Tesla? Some say it's EU Soros versus USD Musk. A grudge. Maybe partly true, but dig deeper. Tesla's not just a Trump-era darling. Until last week, it was nearly 5% of the Nasdaq index. It's a rare AI stock with real juice. Self-driving cars, smart parking. You can see it. That's why retail investors flooded it with cash. For shorting, if Tesla falls, it's not just crowd panic selling. It'll drag the US market and pop the I bubble. Plus, Musk's been offloading his own stock. Add the tricks I've laid out, and it's perfect. Timing, setup, psychology for a massive short. But here's the kicker. Tesla's likely just the start. Dreamers thinking long-term holding can't lose don't see their accounts getting carved up. No knife needed. The world messes up, but school drills into us. Don't fail. People park cash in pensions, banks, stocks. Markets crash, banks bust, stocks bleed. Yet they tell their kids, don't screw up. If they're not broke, who is? Kids learn to walk by falling. Pilots don't just fly, they handle breakdowns. Investing's the same. In a bull market, blind buying wins. In a bear recession, it's spotting bull from bear. Listen to the street vendor. Here's the deal. In stocks, profit isn't about a stock's potential, it's cash flow. More buying than selling. It rises. Sellers outmuscle buyers. Even great stocks drop. Big players call the shots. Forget financials or economics. Just track the big money. The real terror. Not Soros shorting US stocks. It's his ace 100 times worse. The final strike. Past patterns say shot twos next. Spark a US liquidity crisis. Force the Fed to cut rates. Soros shines at making central banks hand over assets. How? As the US crisis grows, retail fund investors hit stop losses, triggering mass sell-offs. In 2020, US stocks dove so hard they hit circuit breakers for this. Then, ETFs and funds retail bought into get drained. Even idle investors bolt. Outcome? US market implodes. The Fed's got two paths. Watch the US burn as global cash flees, tanking the dollar, or act. Cut rates, print money, flood the market. Past crises? Fed's done both. Rate cuts and cash pumps. Check the US market now. It's already down bad. The Fed predicts recession but swears no rate cuts. Why? Easy. Cuts won't fix it now. Notice the Fed's been losing money for years. Why? They bought US Treasuries ages ago at 2.6% average yield. Recent bank rates hit 4.4%. Cut rates, their costs drop. Losses stop, right? So why hold? Inflation. Truth is, the Fed's losing grip on the US dollar. Last year, they cut rates thrice. If treasuries yield 5% and the Fed cuts, you'd expect yields to fall to 3% or less. People should rush to lock in 5%. Pushing bond prices up. But post-September cut, prices fell. Fewer bought US bonds. When the market ignores the Fed, cuts lose juice. Even high-yield US bonds aren't moving. US Treasury values have halved in years. The US Treasury's dry, no spending cash. If the Fed forces cuts, bonds dive more, and US banks holding them collapse. Now, cuts might light a new crisis fuse. So if the Fed cuts, they'd have to buy bonds, expand their balance sheet, print cash, self-buy treasuries. Just printing money. Print, and the dollar floods, value crashes. See it? Save or not, the dollar's toast. Soros has his mind set. Shot 3 could cash in on the dollar's drop. He could short it. Will he? Not sure. Capitalists like him lean on the US. A dollar crash might not pay, but a falling dollar doesn't need shorting to profit. Cash flees the US, hits safe havens like gold. Soros has been stacking gold hard. When it spikes, his hoard explodes in value. Then coincidence. Buffett's yen bets might shine. US stocks crash, cash flows to Japan, yen rises. Post 2008, gold jumped 180%, yen 50% versus the dollar. That's why I've held gold since last year, shifted to yen late this year. I've ditched most US stocks. Last year's gains were solid, but with the dollar shaky, I've hedged with gold and yen. Investors, entrepreneurs. We don't need to nail the US crash date, just prep for the likeliest outcome. If it hits, we win. If not, we lose little, just some profit. Buffett's big, we're small, so tactics differ, but strategies sink. Shot 3, that's the big asset handoff. Who's the real loser? Think it's not your problem? Simple. Taiwan's labor fund, Vietnam's wealth fund, Japan's pensions, Europe's insurance funds, all deep in US stocks. Crisis hits, they'll cut losses and run. Post 2008, global cash got shoved into safe US bonds. Now, bonds sell okay, but in a crisis, who'll buy? The US owes the world, but a weak dollar shrinks that debt's bite. 2008, US fell, others fell worse. Winners? Capitalists, betting yen and gold. They cashed out high, bought global assets cheap. US banks got bailed out first. Not at the crisis start, but after collapse. Rescued, they scooped global assets. Greek ports, Korean banks, on the cheap. Giants like Goldman Sachs, Morgan Stanley. Post 2008, they didn't fade. They grew, monopolies tighter. Buffett's wealth soared, most bottom fishing in 2008. Point is, from now, what rises matters less than holding must-haves like gold. The real wins shot 3. Global assets dumped cheap for us to grab. Truth? Soros gets heat for every market hit and short, but with or without him, US stocks and bonds are teetering. A US crisis was always coming. He just pulls the trigger and takes the blame. Market falls, Wall Street spins a Trump recession, Musk's layoffs rile folks, unemployment climbs, some point at the Fed for not cutting rates, crashing stocks. But I've said before, a US market drop helps the financial kings behind the Fed, even the US government. It's about pinning blame. Soros doesn't care about fame, just cash, then he's out. If a shorting titan like him moves first, others pile on, snowballing it. If collapse can't be dodged and all dodge fault, Soros lighting this fuse just makes him the scapegoat. I wrestled with saying this, but I will. Know this. In capital's flow, no good or bad, just richer rich, poorer poor. Which side you picking, rich or poor? Will this play out as we think? How do we tweak plans? Time's tight, so I'll stop here. I share free know-how on getting rich, investing, entrepreneuring, financial freedom. Don't miss out. Subscribe, hit the bell, share this freely. I wish all who liked this video hit financial freedom soon. If you caught 1 or 2 lines here to live better, I'm good.